Good morning, and welcome to the ARC Protocol. I'm your lead anchor, and this is your essential market briefing. Our top story this morning cuts through the digital noise and strikes at the very heart of the financial system. A new report is forcing a difficult conversation about what Wall Street isn't telling you about your long-term investments, and the implications are rattling the foundations of traditional portfolio strategy. Let's dive right in. Our primary focus is an investigative piece from investing.com that peels back the curtain on long-term returns. The report argues that the figures presented in glossy pamphlets and quarterly statements are often a masterclass in misdirection. It highlights the vast and often undisclosed delta between nominal returns, the headline number everyone loves, and the real returns after accounting for decades of corrosive inflation and layered opaque management fees. The data suggests that for many set-and-forget retirement funds, the actual purchasing power gained over 20 to 30 years is a fraction of what's advertised. This isn't just about market cycles, it's about the fundamental architecture of wealth management. Now, building on that theme, CNBC is analyzing the behavioral psychology at play. Their experts are pointing out that the entire reporting system is designed to pacify investors, focusing on short-term upticks while quietly masking the long-term erosion of value. They're examining how the complexity of financial instruments and the sheer volume of data are weaponized to discourage deep scrutiny. The takeaway is stark. The system thrives on informed apathy. It's a critical look at how investor complacency is not just a bug, but a feature of the legacy financial machine. And that brings us to our third story, where disruption is brewing. Decrypt reports a significant uptick in venture capital flowing into fintech platforms that promise radical transparency through blockchain. These protocols aim to put portfolio performance, fees, and inflation metrics on an immutable public ledger. The concept is simple. If the data can't be hidden, it can't be manipulated. While still nascent, this movement represents a direct technological challenge to the old guard's control over financial information, shifting the balance of power back toward the individual investor. Now for our Blitz round, a quick look at the other signals on our radar. First, that explosive report from investing.com is forcing analysts to recalibrate long-term S&P 500 forecasts, factoring in higher sustained inflation. Second, the CNBC piece has triggered a debate on fiduciary duty, questioning if current disclosure standards are sufficient for the modern retail investor. And finally, Decrypt notes that established players like Fidelity are now quietly acquiring talent in the on-chain analytics space, a clear sign they see the writing on the wall. So what's the market outlook? Expect a wave of skepticism. This isn't just a headline, it's a paradigm shift. We're seeing a flight to assets that offer clarity and verifiable performance. Look for increased volatility in traditional asset management stocks and a surge of interest in decentralized finance platforms that prioritize proof over promises. The core message from the market this morning is clear. In the new economy, transparency isn't just a feature, it's the entire product. That's your ARC Protocol briefing. Stay sharp.